Welcome back to the channel, ladies and gentlemen. So as you know, here we serve valuable information on investment, finance, as well as personal growth. If that sounds good to you, kindly log into the channel. So without much ado, we're going to run right into today's topic. So we are going to be talking about a very important investment vehicle called Treasury Bill. So we're going to be dissecting all what you need to know about Treasury Bill, the pros, the cons, and I'm going to be giving you 5 key attributes of Treasury Bill that will make you want to start your investment on it today, like this moment. So without further ado, let's run into it. So without much ado, on behalf of the federal government, they are issued to borrow money from the public to fund government expenditure and control monetary policy. So that is, you are literally borrowing money to the President of Nigeria, President Bola Ahmed Tinubu, to run the affairs of Nigeria. So in another light, you can see it as you being patriotic and also contributing to the growth and development of your country. So there are basically 2 types of market in Treasury bills. We have the primary market and the secondary market. So in the primary market, the Central Bank of Nigeria conducts auction for interested investors like big institutions or high net worth individuals to submit bids for this instrument. After consideration by the Central Bank of Nigeria, licenses are then issued to selected dealers. The minimum amount that is considered in this primary market is 100 million naira. So it's basically for the big fish, basically for the large corporations that have the connect and the resources to make bids to acquire license to deal on this investment instrument. So after issuance, it is in the secondary market that individuals like me and yourself can purchase this Treasury bill, but through the licensed dealers before maturity of the offer. So the minimum value to be bought in the secondary market is 100,000 naira. So at least to an extent, an average Nigerian may be able to afford 100,000 to also partake in this investment product. Now we are going to be talking about 5 key attributes of Treasury bills. So if you are not getting anything throughout this video, these 5 things that I'm going to list out, you should lock it in. You should let it ring in your head, because this is what you need to know, and this is what will foster you into starting your investment in Treasury bill. I mean right now. So number 1, Treasury bill is a short-term financing investment. So this investment is usually between 3 months and 1 year. So if you are looking for a short-term financing investment to hop on, to put your principal or your funds in, and you know that it is highly secured, Treasury bill should be your top 1 consideration for this type of investment. So number 2, Treasury bills are considered risk-free and a safe investment as it is backed by the federal government. So as you know, the federal government is one of the safest institutions to do business with, because more often than not, they have the resources, they have the capital, they have the cash flow to offset whatever debt that they go into. So having your investment with the federal government is highly risk-free. You are almost certain that you will get your investment back and your interest as well. So number 3, you get your yield or interest upfront, meaning that the moment you are striking the deal, the transaction to invest on a Treasury bill, your interest is being withheld by you. You are holding your interest back. You are only investing at a discounted value. So number 4, it is highly liquid. So Treasury bill is very liquid. It can be sold even before maturity. That is, if someone has an emergency need of money, you can sell it in the secondary market to investors, because there are always people sitting back looking for opportunities for people that want to sell their investment at a very discounted price. So there are people willing to buy from you. So the last point is your earnings is absolutely tax free. So because you are in a financial transaction with the federal government, your earning, your interest has no tax implication attached to it. So you are dealing on a tax-free basis and not paying a dime for tax whatsoever. So we are going to cite a very simple example that we can use to buttress what I've been saying earlier and simplify what we are going to be talking about. So for example, if the federal government is issuing a Treasury bill at the interest rate of 18% annually for 6 months, and you intend to buy 100,000 naira worth of this Treasury bill, remember this 100,000 naira is your face value. Your interest is now calculated with the 100,000. So as you are purchasing, you'll be purchasing at a discount rate, meaning that your interest, you will withhold your interest and purchase with the discounted value, which is 91,000. So you have to do your mathematics and get this figure that I'm talking about. 91,000 naira is what you use to purchase that treasury bill for 6 months. After the 6 months, your face value, the original face value, will now be paid to you. So therefore, the 9,000 naira that you withheld is your yield on the investment. It's your interest. So you should note that treasury bills are sold at a discount to its face value. After maturity, that is when the investor receives the full face value. So therefore, the difference between the purchase price and the face value is the interest earned. So the purchase price, which was your discounted value, and the face value, which was your original intended cost of purchasing the investment. When you deduct that from the order, you get your interest earned. So there are 3 tenures in treasury bills, and I'm going to be listing the 3 tenures side by side with the current interest rate as at the filming of this video. So the short-term tenure 90 days, which is 18% annually. So we have the mid-term, which is 180 days, which is 6 months. That is 19% per annum. Then you have the long-term tenure, which is 1 year, 365 days. This goes for about 21% annually. So with this information, I believe that you are well equipped why you should at least invest in a short-term investment instrument like the treasury bill, which would see your funds do better than just having it sit down in your bedroom or having it sit down in your traditional savings account. So I want to thank you for sticking through to the end of the video, and I want to implore you to like this video, subscribe to the channel, share this video with your friends, your colleagues, your relatives, people around you that are looking for alternate means and very secured means of investment. Thank you one and thank you all. See you on the next one.